Let's get to Deutsche Bank stock. Not falling apart by a long shot. Right now, it's actually moving higher on word of a potential $5.4 billion deal that it will settle with U.S. regulators on issues dating back to the financial crisis. So Deutsche is up about 14%. But writing in a letter to employees that Deutsche Bank is strong and that there's no basis for speculation, the CEO had to jump into the fray. John Cryan is that CEO, saying everything's fine. Please don't talk down this company. But one sharp-eyed fund manager began shorting Deutsche Bank shares 2 years ago when it was trading at $34 a share, saying, quote, "It's highly leveraged with lackadaisical compliance and risk." With Deutsche Bank now trading $13 and change. That short seller is with me now. Brad Lamensdorf is co-manager of the Ranger Equity Bear Fund. Also with us, Gerald ODriscoll of the Cato Institute. He was the staff director for the congressionally mandated Meltzer Commission on International Financial Institutions. Brad, I'll start with you. What did you see 2 years ago that set your spidey sense up and worried about Deutsche and saying, I'm going to short this stock?
We were looking around, so we run a short-only hedging product under the symbol of HDGE. We have about 40 or 50 names, and we always are looking around for financials that aren't doing things the way they should be. The American banks were forced to deleverage, so they're trading it below book, and we really don't see as much risk there. But when we went over to the European banks, they were really operating as they were in 07 and 06.
What specifically about Deutsche sent up the flare?
So the amount of leverage that the bank was deploying. So they were well over 40 to 1, and at the time they were looking for a very large restructuring. They dropped it to about 33 to 1, and we just felt like that the market was going to force this company to either deleverage or they were going to make less money per share.
So you've made some money on this because you started shorting it at 34, and as I said, right now it's at 13 and change. Let's say by the end of market day today, or maybe by Monday, the DOJ and Deutsche issue a release that say we have a deal. Would you say, okay, all's fine now with Deutsche?
No, they have plenty of units. They're in a lot of trouble. The real trouble that should have been highlighted was when the stock started breaking the crisis low, which was in 2008. $20.
Jerry, let's bring you into the conversation. You've been involved with supervising global banks. What now? Let's say Deutsche Bank pays this fine. Say it's at a reduced level of about $5 billion versus the original $14 billion that's been floated. What do we learn from this? These problems, do they all go away?
No, I don't think the problems go away. As Brian said, you still got a leverage problem, and people still worried about the derivatives book. So, I mean, the German banks are a different story than the Italian banks. The Italian banks, it's bad loans.
Bad loans, okay. But Deutsche Bank's woes, are they directly related? Because there's also been this accusation to the ECB's 0% interest rate policy, that banks are having too much trouble standing on their own 2 feet.
Yes, the zero interest rate policy, worse, negative interest rates, just makes the business of banking very difficult. There are no margins. It's very difficult to earn money.
Brad, talking about being so bearish, do you see a collapse eventually of any of these foreign banks, and specifically the European banks?
So we were short a Royal Bank of Scotland and Credit Suisse. We're now just short Deutsche Bank. We really do think they're in a lot of trouble. The environment also can play a bit of a hand at how things play out. If negative rates persist, it is going to be very difficult for them to not get in more trouble.
Jerry, I thought that the regulators, both here and in Europe, put these banks through so-called stress tests, and everybody tended to pass. Are they worth the paper they're written on, these stress tests?
Well, I am very dubious, particularly about the ECB stress test. They're not credible that everybody's passing the way they're passing. So no, and obviously the markets don't believe it.
Do you think there will be a deal with the DOJ, and at what price?
Oh, I definitely think it will be less than $14 billion. I don't think the DOJ wants to force the collapse of a major bank, so they'll consider what Deutsche Bank can in fact pay.
Can you imagine? Right now I'm looking at the market cap of Deutsche Bank. It's at about $18 billion, but if they had to pay $14 billion, Brad, no can do. What about $4 billion? Do they have the capital to do that, or would they have to raise capital?
I mean, even $4 billion is a staggering amount. I mean, they've got some loan books that we feel are much more upside down than they're coming to to say.
All right. It's a great discussion because we're watching history in the making. We hope there might be some resolution, but until then, thank you both. Gerald ODriscoll, Senior Fellow at the Cato Institute, and Brad Lamensdorf, Co-Manager of the Ranger Equity Bear Fund.